Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Muhammad Azim from Traders United. First, risk disclaimer. True webinar house rules. Please take the time to read important webinar rules for attendees. Let me start by sharing a little information about myself. I am a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at elite wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. So let us start with the first one, unemployment rate related to Australia, and the next one is the gross domestic product related to United Kingdom. So what is the unemployment rate in Australia? And the currency pair I'm going to focus is the AUD-USD currency pair. The Australian unemployment rate measures the percentage of the labor force that is unemployed and actively seeking work. It is one of the strongest indicators of economic health and provides insight into consumer strength, business confidence, and overall economic momentum. For Forex traders, this release has a significant impact on AUD-USD currency pair. A lower than expected reading strengthens the Australian dollar because it reflects strong employment conditions and reduces expectations for Reserve Bank of Australia easing. A higher than expected reading signals labor market weakness, often leading to AUD-USD downside pressure. Because of its tendency to generate short-term volatility, Forex traders monitor this release very closely. Now, the event details. We got this unemployment report on December 11th at 12:30 a.m. UTC time. And the currency pair we're going to focus is the AUD-USD currency pair. Australia's job market has begun to show signs of gradual cooling after a long period of strong employment growth. Rising borrowing costs, reduced business hiring, and softer consumer conditions have contributed to a moderation in labor demand. However, the unemployment rate holding steady at 4.3% instead of rising as forecast. The forecast was 4.4%, and the actual number we got is 4.3%. This outcome reduced immediate expectations for aggressive Reserve Bank of Australia easing. The December 11 release was particularly important as labor market conditions remain a central factor in Reserve Bank of Australia's balancing act between controlling inflation and maintaining employment stability. The recent Australian employment data highlighted slower job creation across service based industries and signs of declining full-time positions. This increases in part-time employment and wage growth that remains steady but uneven. So businesses showing cautious hiring sentiment. The market forecast of 4.4% unemployment suggested continued cooling. Analysts outlined three possible scenarios ahead of the release. The first scenario was that let's say we get a number which is less than 4.4% number. That's bullish for the AUD USD. And this is what we actually got. And if we take a look at a price chart of AUD USD currency pair, here it is. The price action of Aussie dollar is actually trying to find some support over here. Okay, but over here we got this bullish price action overall, but then on the news date we actually got a drop in market, and market is still trying to drop over here. I will come back to the technical analysis a little later. So we got a number which is 4.3% number, which is equals to the previous number 4.3% instead of getting a 4.4% number. The unemployment rate of 4.3% is better than the 4.4% forecast, signaling stronger than expected labor market conditions. So the first thing we got is basically AUD USD currency pair actually moved higher, then it tried to drop in coming days after that. So the unemployment rate delivered a positive surprise at 4.3% versus the 4.4% forecast, reinforcing Australian dollar strength. As expected, AUD USD currency pair first moved higher and then it dropped. Kind of moved a bit sideways because the actual 4.3%, it's not much far away from the 4.4% forecast and even the previous one, which is the same number, 4.3%. So I would say we got overall first a drop in the market and then kind of a mixed signal over here. The next one is the gross domestic product, GDP, month over month related to UK. So let me talk about it. The UK gross domestic product month over month, M over M stands for month over month, measured the percentage change in the total value of all goods and services produced across the economy compared to the previous month. It was a critical indicator of economic momentum and a major driver of British pound sentiment. A higher than expected GDP reading typically boosted GBP and expect a bullish rise in pound dollar currency pair as it indicated stronger economic expansion and reduced expectations for Bank of England easing. Conversely, a weaker than expected reading signaled slowing economic activity, slower business output, and lower consumer demand, which usually weighted on British pound versus United States dollar currency pair. Now, on December 12th at 7 a.m. UTC time, we got the GDP data report. The previous number was minus 0.1% number. The forecast was positive 0.1%, but the actual number we got is again minus 0.1%. So leading up to the release, the UK economy had shown mixed performance with signs of stagnation due to elevated borrowing costs, weaker business investment, and cautious consumer spending. The previous GDP reading of minus 0.1% highlighted softening momentum as several sectors struggled with slowing demand and tighter financial conditions. The 12th December 2005 release confirmed that momentum remained weak. The actual GDP of minus 0.1% failed to meet the forecast of 0.1%. So we got a negative number instead of getting a positive number, indicating that the modest recovery many traders had expected did not materialize. This reinforced concerns over economic stagnation and influenced Bank of England policy expectations. Recent economic trends in the United Kingdom showed weak output in manufacturing and construction, along with slower growth in services, particularly hospitality and retail services. So the way I see different firms reducing hiring due to cost pressures and consumer spending holding steady but still fragile. Business confidence improving slightly but remaining below long-term averages. The forecast of 0.1% growth had reflected expectations of a modest recovery, and different analysts had considered that we will get that number. But in actual reality, we got minus 0.1% number. So the actual reading fell into the uh, minus category, and that signaled continued economic weakness, increased expectations of a more dovish Bank of England stance, and that's bearish for British pound. So likely GBPUSD, is going to drop. Now, if you take a look at a price chart of GBPUSD currency pair, we got the drop on 12th December over here on this day. But as of today, market is again trying to rise up over here. So the news came out and we got the drop in the price action of GBPUSD currency pair. That is in line with the fundamental news announcement that we got. The GDP month-over-month reading reaffirmed its role as one of the most influential indicators for the British pound, with the actual result at minus 0.1%. The economy failed to show the expected recovery, prompting bearish sentiment for GBP/USD currency pair. Forex traders also observed sectoral performance, manufacturing services and construction, month-on-month growth patterns, revision to previous data, trends in business investment, consumer-driven output changes. So these factors provided additional insight into the underlying health of the UK economy. The UK GDP released on 12 December 2025 highlighted persistent economic weakness. GBPUSD drop in price action is in response, demonstrating the market sensitivity to missed growth expectations. The event reinforced why GDP month over month remained a high impact indicator, I would say financial indicator, for Forex traders evaluating British pound sentiment and Bank of England policy implications. Now, let us take a look at previous week global market trends. I'm going to discuss the euro dollar and US dollar Swiss franc currency pair. So let us take a look at euro USD currency pair. The way I see euro USD is trying to rise up over here. This was the bullish breakout in price action. And if you take a look at euro market, created this short-term pullback, and now it's going back up over here. Now, it's quite possible, if I zoom out a little bit, market is probably going to rise up further, and then we are probably going to see some sort of a bearish pullback in market. This one goes over here. So market is probably going to drop after printing a new high, and then expect further bullish price action in euro dollar currency pair. So a good idea is to wait for a pullback first before you look for any long uh, buy trades. Next one is the US dollar Swiss franc. Swiss franc is going down, and I expect further weakness in price action. Last week I discussed about a drop in price action of USD Swiss franc, and this is what we got actually. So this was the support, here's the resistance, and price action took out the support. So it's quite possible that USD Swiss franc on a short-term basis, it's most likely going to drop even further. Next, now let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the gross domestic product related to New Zealand, and the second one is the main refinancing rate related to Europe. So these are the upcoming news events. Let's start with the first one. What is gross domestic product? Q over Q. Q over Q stands for quarterly. So the gross domestic product, also known as GDP, measures the change in the total value of goods and services produced in New Zealand compared to previous quarter. It is one of the most important indicators of economic health and overall growth momentum. A higher than expected GDP reading signals stronger economic activity, which typically supports the New Zealand dollar and can lead to an appreciation against the United States dollar. Conversely, a weaker or negative GDP figure suggests slower economic growth, often weighing on the NZD and putting pressure on the New Zealand dollar versus United States dollar currency pair. Because GDP reflects the overall performance of the economy, Forex traders watch this release closely. It has the potential to trigger short term volatility and influence market expectations regarding monetary policy from the Reserve Bank of New Zealand. Now, let me provide some more details. On December 17th, 2025 at 9:45 p.m. UTC time, we will get this financial report. The previous number was minus 0.9%. Forecast is positive, it's 0.9%. The actual data not yet released. The New Zealand economy had faced several challenges over recent quarters, including soft domestic demand, tight lending conditions, and cautious business investment. The previous GDP reading of minus 0.9% highlighted the slowdown in economy, prompting concerns over near-term growth momentum. Forex market participants are now expecting a rebound to 0.9%, which is a positive number for this quarter, which would indicate a recovery in economic activity. This upcoming release is particularly important for traders because it may confirm whether New Zealand's economy is stabilizing or if growth remains fragile. The GDP data will also influence expectations for the Reserve Bank of New Zealand's future monetary policy decisions, including potential interest rate moves or easing measures, making it a high impact financial event for NZDUSD currency pair. Now, the recent economic financial indicators in New Zealand suggest mixed signals. Consumer spending has shown modest improvement but remains cautious. Exports remain a key growth driver amid global trade uncertainty. Construction and service sectors are showing gradual recovery, and inflationary pressures remain under watch but are moderating. Based on these market trends, analysts anticipate that we might get a 0.9% number when the actual GDP report comes out. So if we do get a 0.9% number, then it's quite possible that NZD USD is probably going to rise up. Now, if we take a look at a price chart of NZD USD currency pair, let me see. So here it is. The NZD USD currency pair showed overall long-term downtrend over here. Let me open up a new chart over here. Let's go over to a daily time frame, and let's go to this template. So as far as the daily time frame is concerned, um, this is where we got the breakout right over here. So this breakout suggests that New Zealand dollar versus United States dollar, it wants to go up. So we might get maybe some sort of a pullback in price action, but overall trend is still up inside NZD versus United States dollar currency pair. So price is probably going to rise up from current levels, or even if we do get a pullback, uh, some something like this, we would probably get a deeper pullback, I would say, if market is going to provide one. And after that, expect further upside. So a good idea is to look for a potential buy trade setup somewhere over here around this area. Okay. Now the trend is up. This is what I see based on daily time frame. I will come back to this later. So the news announcement that we are going to get on December 17, if we get a 0.9% number or somewhere near to that, or maybe we get a greater than that number, then the chances are high NZDUSD is going to rise up. Well, it's already going up, by the way, in daily time frame. On a long-term chart, it's still a downtrend in a weekly chart. So the trading outlook is traders should expect a higher volatility around 9 colon 45 p.m. UTC time on December 17th, and initial sharp move may occur as the market digests the headline number, and usually market tries to go up and then goes back down after that. So follow through may depend on detailed sector performance and revisions to previous data. So forex traders should monitor liquidity, spreads, and broader US dollar trends that will help confirm market direction. So the key takeaway is the New Zealand dollar GDP quarterly release is a high impact economic event for NZD USD currency pair, with the forecast at 0.9%. Any surprise, especially a stronger than expected rebound or continued weakness, may create significant short term price movement and trading opportunities. The next one is the main refinancing rate related to Europe, and I'm going to discuss the Euro USD currency pair. The date and time is December 18th at 1:15 p.m. UTC time. Now, what is the main refinancing rate? The main refinancing rate is the key interest rate set by the European Central Bank, also known as ECB, determining the cost at which banks can borrow funds from the ECB. It is a primary tool for influencing monetary policy, inflation, and overall economic activity in the Eurozone. A higher than expected rate or hawkish guidance generally strengthens the euro, signaling tighter monetary policy and higher yields, often pushing euro USD higher. Well, euro USD is already going up. If we take a look at this daily time frame, we got this breakout, and euro USD is already going up. Conversely, a rate cut or dovish guidance signals economic support and lower returns, which can weaken the euro and pressure the euro dollar to the downside. Because of its direct influence on interest rate expectations and market sentiment, forex traders watch this release closely. Uh, this main refinancing rate or the interest rate expectations and market sentiment, this could really move the market to the upside or to the downside. So forex traders watch this release closely, and it often produces significant short-term volatility and can set the tone for euro performance in the near term. Now, the previous number we got was 2.15%. That's the interest rate. and the forecast is 2.15%. So different market analysts suggest that it's going to remain the same. It's not going to change. The actual data not yet released. It is going to be released on December 18th at 2025 at 1:15 p.m. UTC time. The Eurozone economy has shown mixed performance in recent months. Inflation pressures have begun to ease slightly, while economic growth indicators such as manufacturing and services have shown signs of slowing. The upcoming ECB rate decision is particularly important as it will indicate whether the central bank is likely to maintain its current stance or tighter further or adopt a more cautious approach. Even if the headline rate remains unchanged at 2.15%, the accompanying statement and forward guidance could significantly affect the price action of euro dollar currency pair. Now, the recent trends in the Eurozone suggest inflation is moderating, though core inflation remains above target in some areas. Manufacturing and services activity shows a mild slowdown. Employment data remains resilient. Consumer and business confidence are stable but cautious. Based on these factors, Forex analysts expect that we might get a 2.15% number as far as the interest rate is concerned. So let's say we get a number that is higher than 2.15% number. If that's going to happen in that particular scenario, Euro USD is obviously going to rise up even further. I would say climb sharply. Okay. So traders should expect elevated volatility around 1:15 p.m. UTC time. The ECB Main Refinancing Rate decision on 18 December 2025 is a high impact financial event for euro dollar currency pair. While the forex market expects the rate to remain at 2.15%, any surprises in the interest rate decision or statement, hawkish or dovish, could significantly influence euro sentiment, interest rate expectations, and short term price action. So, forex traders should prepare for potential volatility and trade with disciplined risk management. Okay, let's talk about the current week global market trends, and I'm going to discuss the euro dollar, Australian dollar currency pairs. Let's take a look at euro USD. So, as far as the euro dollar weekly chart is concerned, we got this breakout over here, but the way I see the support is still intact. So, let me show you the support over here. Here's the support, the old swing low over here, and market even managed to take out this previous high. So this is telling me that euro dollar currency pair wants to go up one more time. As far as the daily time frame is concerned, we got this bullish breakout, then a retest, and then market rallied up. So even in 4 hour time frame, we get a pullback. A good idea is to look for potential buy trade setup with a pullback. Okay, instead of looking for a buy at the current market, that's not a good idea to buy at the current price action. Next one is the Australian dollar. Okay, AUD USD currency pair. uh, as far as the weekly chart is concerned, we got this bullish breakout. Okay, so if we take a look at this daily time frame, here's another breakout in daily chart. Okay, let me adjust this trend line. So we got this bullish breakout. So even if we do get a pullback is basically going to provide a possible buy trading opportunity, a chance to join an uptrend. So overall, I would say the trend is up inside Australian dollar versus United States dollar currency pair. Next one is the NZDUSD currency pair, New Zealand dollar versus United States dollar. And then I'm also going to cover the spot gold. So NZD-USD currency pair, as far as the weekly time frame is concerned, it's still a downtrend going on. But if you take a look at a daily time frame, this is where we got the bullish breakout. So even if we do get a pullback, I would say it's a good idea to look for a potential buy trade setup over here, wait for a pullback, and then look for a potential long trade over here. Market is probably going to rise up further. Next one is the spot gold. Spot gold trend is up over here. Nice uptrend going on. I can draw one more trend line over here. So the way I see market just keep printing higher swing highs and higher swing lows. It's a clear, nice uptrend going on in weekly time frame of XAUUSD pair. Next one is the daily. Daily time frame, we got this breakout to the downside. So this breakout is telling me that market wants to go sideways for the time being, but still it's an uptrend. Okay, so the trend is up, and we might get some sideways price action and then expect further upside in spot gold. Okay, let me see if you guys have any questions or comments. And if you have any questions or comments, feel free to type inside the chat box and I will be happy to answer your questions. So what we have learned today, well, we discussed about the gross domestic product quarterly report related to New Zealand dollar. And then we also discussed the main refinancing rate related to Europe, and I discussed the euro dollar currency pair. Then we take a look at euro dollar, AUDUSD, NZDUSD, and spot gold. These are the assets to watch out for profits. What you should do next is, well, stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, December 23rd, 2025 at 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day and bye-bye.